We're heading towards quite the finish for stocks on that Treasury announcement just a short time ago. We're at the highs of the day across the board. Dow's good for a little more than 230 points as we speak. S&P 500 going for its first ever close above 4,900. Looks to be on the way to doing that. And then, of course, as yields are coming down, the NASDAQ is starting to rip a little bit as well. 15,627. It's the outperformer today, up better than 1%. Speaking of tech stocks, they're moving higher to kick off this busy week of earnings with all of these mega cap stocks reporting their numbers this week. Microsoft, Alphabet, Amazon, Meta. You know who's reporting at this point, along with Apple. Let's bring in King Lip of Baker Avenue to discuss. So these are at the top of your holdings as well. What are your expectations?
Our outlook is still positive on all of these names. So overall sector positive, but we do recognize that a lot of these names have moved quite a bit already, and it's been just a couple of weeks in the year. So some of this good news may very well be already priced into some of these shares, that are reporting this week.
So how do you judge that versus the fear that there's just little room, maybe not even little, no room for error?
That's a good point. I think it has to do with valuation. So names like Microsoft and Apple, for example, have relatively high valuations relative to their 10-year historical valuations, which you just showed us earlier on. So they really need to see sort of strong beats and raises on those types of stocks. On the other hand, stocks like Meta, Amazon, Google have relatively low valuations or inline valuations relative to their historical averages. So from that perspective, there's a lower hurdle to beat for those names.
Talked to a few people already about what they perceive to be the most important one. Microsoft seems to be at the very top of most lists. Is there one that you're most concerned about? And maybe Apple's the easiest one to pick on. It's flat to start this year. Questions about where the revenue growth is. What about your concerns, if any?
Yeah, I would say Apple is the low-hanging fruit, pun intended. It is actually a little bit of a concern for us just because there are some channel checks that show the iPhone hasn't been particularly robust. China weakness has been a concern. Valuation, as we just mentioned, the shares have lagged. However, longer term, we still like the name because the ecosystem is extremely valuable. The services growth is still extremely strong. Potential for new products is always lurking for Apple. And the strong cash flow. I think there's catalysts for the shares should the company decide to increase their earnings dividend.
You tempted to trim any of these? Because I guess I asked that in the context of even investors that I've been speaking with, whether it's this show or halftime, who, one in particular sold Meta, still loves it, but just can't ignore the fact that it had the best year ever in 2023. Now, I know that was after the worst year ever in 2022, but the stock has ripped a lot.
Yeah, the good thing about the way we manage our tech positions is that we trim along the way. So as long as we like the name for the long term, we'll continue to hold them. But we do trim along the way to take some profits, to diversify the portfolio. So for those reasons, we still hold those. Those are our top holdings in our firm. If for any reason the sort of long-term story is no longer attractive, then we'll completely sell them out.
Is there one that you have your eye on that you don't own? I've also had some suggest that we need to move away from these magnificent 7 names and look at more of a so-called AI 5 and include names like Broadcom and AMD, for example, within that mix. I don't think I see those on your top holdings. That doesn't mean you don't own them, but enlighten us further if you could.
Yeah, one that we've been following that we're starting to build a small position is Adobe, actually. And the reason why we like Adobe is we think its generative AI business is extremely compelling. It makes content publishing, content creation that much easier for creatives, and it doesn't get as much AI sort of highlights as the other names. But it's a company that we think will see extremely strong earnings growth for the upcoming quarters.